Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler Trading with your Weekly Edge show for July 16th. Let's take a look at what we're going to be reviewing today. First up, we will take a look at some of the more impactful headline news that drove price action last week, other activity as well, particularly relating to earnings season. So we'll get into that. Also, where did we close the week with the current markets? Are we back in positive territory, or does that downtrend still remain firmly in place? We'll get to that. And then viewer question of the week, and it's all about last week's move into semiconductors. Can it be played? Is it a bottom? We'll get into all of that and more today's show. So first up, as it relates to economic news, on Monday, actually earlier this week, we did get very high inflation numbers, a 9.1% gain in June. That was the CPI, or Consumer Price Index, drove the markets lower, as high inflation is the enemy, if I may, certainly of the Federal Reserve. So that was not such good news. And then from there, we did see software stocks get hit last week due to corporate downgrades and Wall Street, and we'll get into that as well. Also, later in the week, we did get further inflation data. The producer price index jumped, and it was all about those high energy costs that have been in place here of late. Also, weekly jobless claims were on the rise. They were the highest since last November. This is a continuation rise, certainly since last week as well. So a bit of a mixed note as it relates to economic data, with a slowdown in employment, small, but albeit there, while prices in the way of inflation are on the rise. Friday, we did get consumer sales and consumer sentiment numbers that came in higher than expected. Now, unusually, the markets responded positively to that news. There was a rally, particularly in some of those retail names, and that was unexpected because this heated up economy in turn would keep inflation high, but we'll take the rally, and we will get more into today's rally's impact on the markets. Next week, pretty light on the economic calendar. However, corporate earnings season is very much in full swing. I'll share with you some of the more impactful companies that are due to report next week so that you can be on alert. From here, let's go ahead and take a look at where we closed the markets this week. Here we are with the daily price chart of the S&P 500, and lots of squiggly lines here, and I'll share with you what they are telling us. First up is the momentum indicators. That would be the RSI up here. It is still below that net neutral. We want to see RSI get into positive territory, telling us that there is positive momentum in the markets. Not quite there. Stochastics, this is a faster moving momentum indicator, also in negative territory, so not constructive there. As we can see here on the broader markets on Friday, today's rally was able to push the markets back above this green 10-day simple moving average. While constructive, we do still have more work to do as it relates to a reversal, and in particular, a bottoming process that needs to materialize before we can turn bullish on the broader markets. And let's drill down from there. Take a look at the 11 underlying sectors in the S&P 500. This is a 2-month daily price chart view. I've gone ahead and added an RSI indicator, and it is shown here in descending order. In other words, these sectors up here in the forefront are relatively outperforming the broader markets and the other sectors at this point in time. And we can see here in the forefront, healthcare is up here. Also consumer staples, two rather defensive areas of the markets. We are certainly still in a period of uncertainty, but take a look. Technology, and this is a sector that snuck into this top 4 last week after all those mega cap FANG stocks had a good week. Nice to see it was able to retain a presence up here with a Thursday into Friday rally, most of it earnings driven. I'll share that with you as we move on. Of course, you do want to be aware of these weaker sectors. Make sure you have no representation in these areas, or certainly that you've lightened up. And first up here is energy. And this is, of course, an area that had led the markets going into mid-June. Certainly a real steep sell-off here, and that downtrend still firmly in place. And I'll share with you the price of oil. That certainly has been one of the several impacts that is taking place as it relates to energy. We can see materials down here. This is all about a rising dollar. I'll get into that, but these commodity related areas are currently struggling. So let's move on beyond those sectors, because what I do want to share with you is some of the activity beneath those sectors, some of these sub-industry groups that are really quite impactful as it relates to what we are seeing here in the broader markets. Again, a 2-month daily price chart view, and I'll share with you that relative strength, these stronger areas up here at the forefront. And here we are with the US dollar. It kind of stabilized a bit this week, but for the most part still on the rise. We talked about that impact on commodity pricing. And then up here remaining in the forefront as it relates to relative strength are biotech stocks. This is IBB, the biotech ETF, and it did pull back this week, but very orderly, and certainly makes sense given its significant outperformance relative to the broader markets for about 3.5 weeks prior to this week's pullback. So here's an area that is newer to the stronger subgroupings up at the forefront, and it is semiconductors. I talked about technology potentially coming on, and in particular, semiconductor stocks. They did rally about 3%. That's relative to the NASDAQ, which was down 1.8%. We can see this nice uptick taking place, momentum with the RSI turning positive, and this nice black line up through the red on the MACD, indicating that this downtrend is in the throes of reversing. So that's good news. We certainly do still have work to do. However, as we get to our subscriber or viewer question of the week, we're going to share with you the stock that really preceded this nice rally and other names that are looking somewhat constructive. But again, overall, this downtrend is the dominant trend. We're going to see how the semiconductor ETF performs here at this red 50-day simple moving average. A price break above that, of course, would be constructive. So let's move on. I mentioned that software stocks had a very tough week. Microsoft among the bigger names that was downgraded, and then management from ServiceNow, a well-known software company, came out and guided lower. So both of those items pushed software stocks down this week. They were down over 5%. This is relative to last week's nice 6% rally. So continued volatility among that group, but still the downtrend remains among these software stocks. From here, viewer question of the week, and I will share with you that large semiconductor stock that came out not only with strong numbers, but also guided their earnings growth higher for the third quarter. And this is Taiwan Semi. TSM is the ticker symbol, certainly a well-known, one of the largest manufacturer of semiconductor chips. And we can see the response to that earnings, a nice rally. However, still potential upside resistance here at that 50-day moving average. Once it does potentially trade above that, we could easily rally up to this blue 200-day. We can see the momentum with the RSI is now positive. And then we have that nice MACD black line up through the red crossover. Not a whole lot of other stocks in the semiconductor space are looking constructive, but I will share with you one name that is on my watch list. And really at this point in time, it's very critical to keep your watch list updated so that when the markets turn bullish, these names that are first out of the gate, look the most constructive, have strong earnings, will be your outperformers. So Qualcomm is on my watch list. We can see that it's in the throes of potentially reversing its downtrend. Higher lows here, a nice growth prospects for this semiconductor company, breaking above these shorter term moving averages. Same here with a break above this blue 200 being very constructive. Outside momentum indicators are positive. So I am certainly keeping my eye on this stock and that semiconductor group Last up, we'll take a look at a couple of the bigger names that are due to report earnings next week. First up here is Tesla. They will be coming out on Wednesday with their numbers, so we will see if the company comes through. They actually did pre-report their sales for the second quarter. They were not positive, so whether that negative or unpositive earnings is already built into the stock remains to be seen. Another company due to report next week on Wednesday. This is a semiconductor stock that may help the group depending on their results, and it's ASML Semi, still again in the throes of potentially reversing this downtrend, but keep an eye on the earnings results as well as management's guidance, and most importantly, the market's response. So that's it for this week. I'll look for you again here next week. For those that haven't already, use the link below. You can trial my MEM Edge report for 4 weeks. It comes out twice a week. Very informative, relating to where we are in the markets, sector rotation and group rotation, and then individual stocks that can benefit and are currently on the buy list. Have a great weekend. I'll see you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.